stocks which are buzzing around. We have Bharat Dynamics up 7.5%. So defense stocks which had been doing well earlier is now coming back. So but that's the one which is higher, and the others are as well in focus. But let's talk about Tata Steel that reported an inline set of fourth quarter numbers. The revenue impacted by drop in realizations across geographies despite rise in volumes. Nigel spoke with TV Narendran, who's the managing director and CEO of the company. Started by asking him about the prices. Listen in.
Yes, prices have moved up a bit. In India, I think it's about 3,000 rupees higher this quarter than last quarter. That's the way we see the prices in India. In Europe, it's about 20 to 30 euros higher, in this quarter compared to the last quarter. So that's the situation that we see in both geographies.
Okay, coming to India then, Indian prices, as you said, they've moved up considerably. Now you have that safeguard duty as well, which will protect the domestic industry. My question to you is, the landed cost of steel is actually cheaper today. That is, the Indian steel is at a premium in comparison to the landed cost of imported steel. If that is the case, do you see this pricing sustain, or do you think there is a bit of a risk to pricing going ahead?
I think the pricing can certainly sustain at this level. Whether it goes higher depends on what happens in the international markets. I think the concern continues that China exports about 10 million tons a month. They exported that much in March and in April, and that certainly has a dampening effect on international prices. But I think when you look at importing into India, there is a risk of forex. There is a risk of material arriving 3 months later. You don't know where the prices will be at that point in time. So that's why imports are not yet significant. I think the safeguard duty has helped stem the flow a bit. And so we're looking forward to some stability in prices and some positive movement in prices going forward.
Okay, all right. What about the cost of coking coal? Because the cost of coal is another big variable that will help us determine what is the EBITDA per ton. So what was the cost in the past quarter? How much did it cool off from the previous quarter? And on an average for this quarter, what should it look like?
I think we're guiding that this quarter will be about $10 lower in terms of consumption, coking coal, because we got a lot of the benefit in the last quarter. So the drop in coking coal prices has stopped. It's stabilized. In fact, it's gone up by about $10, $15 in the last few weeks. But from a consumption point of view, we expect a consumption cost to be about $10 lower this quarter compared to last quarter.
Okay. You've guided for big savings in the coming year, sir. That's around 11,500 crores between various geographies.
Yeah.
What does it mean in terms of the profitability going ahead?
Yeah.
When does Europe move into the green? And for India, what is the rough EBITDA per ton we should work with for the coming year?
So if you look at Europe, as you're aware, we are in the middle of transformation, both in UK and in Netherlands. I think the challenge in Europe has been that we need to continuously transform to stay ahead of the curve. So in UK, a lot of the transformation is already underway. As you're aware, we closed the blast furnaces last year. We will have the electric arc furnace coming up in 2027. But in between, we'll be taking out a lot of costs. We've already taken about 230 million euros of, or rather 230 million pounds of fixed costs in UK in the last year, and we'll be taking out another 200 million pounds of fixed costs in the UK this year. So a lot of the cost saving is coming from that. In Netherlands as well, we are in the middle of a major transformation. If you look at the Netherlands numbers, we have actually swung from minus 450 to 500 million negative EBITDA to 80, 90 million positive EBITDA. So that's a 500 million swing in a difficult market. And we expect to move in that direction this year as well. So to go back to your question, I think we expect Netherlands to continue to be obviously EBITDA positive and get better as we go along because of the actions that we are taking. And if the prices move up, that's going to help us even more. As far as UK is concerned, we are pretty close to, break even as far as EBITDA is concerned. Some of these cost takeouts of last year will play out this year. So you'll see that playing out during this year. So we expect that this year, certainly Europe between Netherlands and UK will clearly be EBITDA positive. But there's still work to do there. As far as India is concerned, yes, the EBITDAs, I can't give you specific guidance on the EBITDAs, but certainly we expect this year to be better than last year.
All right. On Europe in particular, could you tell us by which quarter do you expect European business to move into the green? And you mentioned that UK as well is moving in that path. So when does UK turn positive?
Yeah. So I think Europe will move into the green from this quarter itself. Okay. But UK will still be marginally negative this quarter. And we hope in the next couple of quarters, we will turn green there as well. And we are expecting that UK will be green for the full year.
Okay, all right. So that's encouraging to hear then. Well, Mr. Narendran, tell us about the debt number as well, because there has been some release of working capital. So that's why we've seen it come down, I think, from around 88,000 crores, it's come down to around 82,000 crores. However, you have a Capex plan as well that's underway. And I think last year it was roughly around 15,000 crores. This year, I think you're guiding for a similar number. So tell us, what is the Capex plan for this year? And in an absolute number, where does the net debt head to?
Yeah. So I think the Capex plan stays around the same, around 15,000 crores, because we will be completing the Kalinganagar expansion. At least the spends, a lot of the spends are happening between last year and this year. So that's on the Capex side. Last year was a year where we were coming out of a difficult market, the peaking of the Kalinganagar Capex, and not really getting the volumes that we were to get out of it because Kalinganagar was still ramping up. So we expect better cash flows this year, and we expect to bring down the debt. I'm not giving you a specific number, but we will certainly bring down the debt during the year.
So net debt number at the end of FY26 will be lower than FY25. Is that correct?
That's correct.
Could it be $1 billion lower?
Well, that's what we are always chasing, but we are still some distance away from that, but we are working on it.
All right, Mr. Narendran, we cannot wrap up any conversation without talking about the man of the last few months, Mr. Trump. These tariffs, is it impacting demand? How do you see things panning out? China, as you said, they continue to export, which is putting pressure on the globe on the whole, the global ferrous industry. But because of these tariffs, what kind of changes are you seeing both on the supply and demand side?
I think what it has done is obviously provoked everyone to look at themselves. So if I look at Europe today, Europe is looking at how can they work in an environment where they can't depend as much on the US as they did in the past. So you see a lot more positive thinking in Europe about manufacturing, about investing in defense, etc. So over the medium to long term, I think it's positive for Europe because they will spend more in Europe, whether it's what Germany has already announced and whether it's about the other countries planning to spend more. So there is a medium to long-term positive impact on Europe because I think manufacturing will get a boost in Europe. But having said that, in the short term, of course, we are dealing with these tariffs. UK has got into an understanding with US, so we don't see the impact of that. We don't see a negative impact of the Trump tariffs because UK has got itself a deal. But as far as EU is concerned, they're still negotiating. About 700,000 tons of steel goes from our Netherlands operation to Europe. To the US. Some of those steels are not made in the US. So to that extent, our customers in the US are also struggling with these tariffs. And part of those tariffs will obviously get passed on to the customers there. But that's a discussion we are having. We're also waiting to see what the EU government and the Trump government concludes in their discussions.
Final question, sir. For the India business, what is the volume growth you're looking at for this year? And also on ground, demand is as strong as you expected?
Yeah, demand has been quite reasonable. I wouldn't complain much about the demand. In fact, it's because the demand has been strong that Indian steel producers have managed without exporting much, because international prices are not great and export markets are not really attractive. So from that perspective, I think the Indian demand is holding up okay. It could be better, but it's not too bad. So this year we are expecting about 1.5 million tons more than last year. We have another blast furnace relining coming up in Jamshedpur, and that's why we have some loss of volume in Jamshedpur because of that. But net, we should be about 1.5 million more this year compared to last year.
All right, 1.5 million more this year when it comes to volumes for India. This year, that's the word coming in from the management at Tata Steel. Meanwhile, before we slip into a short break, a couple of stocks that notice mention or require mention. We have the mid-cap index, which has moved to the high point of trade, 0.2% in terms of gains. Allied Blenders, that's the one which is up about 6%. We're also seeing some traction in Latravenues Tech, which is basically the owner of Ixigo. Travel and tourism stocks have been doing well for the last couple of trading sessions. So we've moved higher on that one. Rallis India continues to see some gain, up around 6%. And finally, we have Zaggle Prepaid. This is up 7%. This morning, we had the management join us here, talk about their growth guidance for this year. At the same time, look at margins around that 10 to 11% mark in this year itself, with management saying that they may perhaps look at buying stake in the company as well. Take a short break, and as we do that, let's give you some programming notes. CNBC-TV18 and HSBC India are back with season 2 of the SME Championship Awards. This prestigious platform celebrates the SMEs that are pushing boundaries, making an impact and shaping the future. Nominations are now open. You can do that by scanning the QR code and submitting your entry for the SME Champion Awards Season 2.